Hello everyone, let me introduce myself. My name is Rafai Sapatri from NPM 234111047 Management Class 23C. Here I will explain about the capital market. Enjoy the poor watching. The capital market is a market where parties, companies, governments, investors, and other parties transact long-term financial instruments, such as stocks, bonds, and other securities. This market functions to provide funds for companies or countries and provide investment opportunities for the community, which can be in the form of tradable instruments, traded securities. The capital market plays an important role in a country's economy because it can mobilize funds from the community and direct these funds to sectors that require long-term financing, especially for business and infrastructure development. Purpose and function distributing funds. The capital market provides an opportunity for companies to obtain fresh funds from the public for project funding, business expansion, or working capital, investment opportunities. Investors can make profits through purchasing capital market instruments, such as stocks and bonds. Determining stock prices. The capital market functions to determine the prices of security instruments, such as stocks, based on the supply and demand mechanisms in the market, increasing liquidity. Instruments traded in the capital market, such as stocks and bonds, can be traded in the secondary market, thereby increasing liquidity for investors. Types A. Shares. Shares are securities that show ownership of a company. Shareholders are entitled to dividend distribution and voting rights at the general meeting of shareholders, GMS. B. Bonds. Bonds are debt instruments issued by companies or governments as a form of loan with a promise to repay the principal and interest within a certain period of time. Bonds provide a fixed rate of return, coupon, that is paid periodically to the bondholder. C. Commercial securities. Commercial securities are short-term debt securities issued by companies with the aim of meeting short-term financing needs. D. Mutual funds. Mutual funds are a vehicle for investors to collect funds managed by investment managers, which are then invested in various financial instruments, such as stocks, bonds, and money market instruments. Capital market structure. The primary market is the market where securities are first issued and sold to investors. In the primary market, companies issue stocks or bonds for the first time through an initial public offering, IPO, or bond issuance, L. The secondary market is a market where securities that have been traded in the primary market can be bought and sold by investors. In the secondary market, investors can trade stocks or bonds that they own in the open market. Parties issuer, a company or entity that issues securities, stocks or bonds, for sale on the capital market. Investor, a party who purchases securities for investment purposes. Investors can be individuals, institutions, or companies. Financial Services Authority, OJK, an institution that supervises and regulates the capital market to ensure that the market operates with transparency and fairness. Risks in capital markets. A. Market risk. The risk that arises due to market price fluctuations that can be influenced by economic, political, and other factors. Stock or bond prices can rise or fall depending on market conditions. B. Credit risk. The risk associated with the inability of a bond issuer or company to meet their financial obligations, such as interest or principal payments. C. Liquidity risk. The risk that occurs when investors cannot sell securities at a reasonable price or within the desired time. D. Inflation risk. The risk associated with a decrease in purchasing power due to inflation that can affect the value of investments. The role of capital markets. Sources of financing for companies. Capital markets enable companies to obtain funds for business expansion, product innovation, or large project funding. Investment opportunities for the community. The capital market provides opportunities for individuals and institutions to invest and profit from rising stock or bond prices. Capital markets are a vital sector in the modern economy, providing opportunities for companies to obtain long-term financing and providing opportunities for investors to invest in various financial instruments. Capital markets serve to create liquidity, efficiency, and transparency in the economy, while also bringing together the funding needs of companies with the desire of investors to obtain returns. That's all the material I can convey. See you later.